Well, hello everyone. This is Leslie Jouflas from Trading Live Online, and welcome to my first, your daily five in the new year of 2023. So I'd like to wish everybody a happy new year, and I hope it's gotten off to a great start for everyone. Well, today I want to talk about this upside breakout that we've seen in the stock indexes the last couple of days. So, uh, we want to kind of determine if this breakout is a go, more upside, or no, it fails. So I'm going to show you on different time frames what you can monitor to make that determination. And I think we'll know probably in the next couple of days what the answer is. Okay, we're going to start with taking a look at views of the Dow Jones Industrials using the YM. That's the E-mini contract for the Dow. And that's over here in the upper left corner. In the upper right corner, I've got the Nasdaq index. And down below are two charts of the S&P 500 futures. Now, all of the charts are on weekly data except for this lower left one, and that's on a daily. So we can kind of drill down and get a little bit better perspective on the price action. So let's start with looking at the weekly chart, and we can see the comparison. I've talked about this before of which indexes have been the strongest and which ones have been the weakest. Well, we can see the Dow Jones Industrial just using a retracement from March 2020, from the crash there, that was the lows, up to the highs of 2000, late 2021, early 2022. It's the same retracement on the Nasdaq and on the S&P down here. So the Dow Jones Industrials on this chart on the YM contract did not even reach the 0.50 retracement. So that was showing some strength by not being able to decline all the way down to a 0.50 or 0.618. The Nasdaq, on the other hand, retraced down to the 0.618, so it's had a bit deeper retracement. And the S&P 500 on this weekly chart from the March 2020 lows to the highs, that retraced to the 0.50. So we definitely have a mix of the indexes. Now, I've also pointed out before this trend line. I've got it marked on the S&P 500. Let me blow this chart up a little bit. We'll get a little bit better view. Some of these lines that you're seeing, these are just some other previous patterns that it outlined. And I kept them on this chart because we're going to be looking at a similar pattern that was on the charts that has had a breakout to the upside. So just to show you the repetitiveness of these types of patterns. So the market has been retracing since this decline started up to this trend line and finding resistance. A few weeks ago, this little move, oops, let me see if I can spread this out a little bit. Oh, I guess not. But right here, you might be able to see the wick of this candle, how it just popped above those trend lines, but it came right back down again. So it got price rejection on that attempt through that trend line. And here we can see pretty clearly, again, this is a weekly chart, so each bar is giving us the weekly data. The last bar that we see here, we've just started this week. So this bar has not closed yet. This is only what the data is showing us for one day out of the week so far. But here we can see that the last few bars on here, we had opens and closes right around the same area. There we go. I turned this off for a second. I spread the chart out, give it a good tug, and it spread out. But you can see that the opens and closes have all been around that same area. And again, we're going to look at this on a daily chart and an intraday chart to get a little bit more perspective. It's made an attempt and came fairly close to this trend line, and today has turned around and closed near the lows. This looks to be Again, we do not have a close on this bar since it's a weekly, but if the week closed something like this, we would be looking at a shooting star pattern. So let's follow that on the weekly chart this week and see how this particular bar closes. Now, with that in mind of getting the view of the weekly chart where the indexes are, here's the pattern that I was mentioning. We had a triangle type of a pattern. I'm going to scale down even further in just a minute to show you the other patterns that were forming as this daily chart formed this pattern. Here we can see I've got these levels marked in. We had a break of support here. The price did get above it. It traded above, but however, today is closed below. And then here are some resistance areas. This is a trend line that's coming up here. And we have where these opens and closes, we're here just extending that across. Now, this particular pattern, we can do a measured target with this by taking the height of the pattern and projecting it up from about where the breakout was. Now, these types of patterns can have different outcomes. They don't all get to what the target is from the measured move. There can be failures of these patterns. So a good rule of thumb is to monitor and see if the price can stay above that breakout area for more than a couple of days. So if the price starts to travel back down deeply into this formation, then we may have a false breakout to the upside. However, you can see that the close today is just resting on the upper bound, the downward sloping upper trend line of the pattern. Now, sometimes they'll dip just a little bit into the pattern and then turn around and continue in the direction of the breakout. But here, if we use this trend line below, if price were to come back down to this trend line and break it, we might see a larger move than to the downside. And the reason for that is it's just the psychology of the market. A lot of traders go with the breakout to the upside. They've got stops down below this level. And if price fails below there, it's taking out a lot of stops and taking a lot of traders by surprise. Now, I like to use the center lines of these types of patterns. I find them very useful. And you can see just drawing, I just eyeballed that. So you can see it's just about the center of the total height of the range. But notice the opens and the closes along this center line. The whole pattern was formed almost by just trading around that center line in this particular case. And then this bar moved quickly above those levels for the upside breakout. So coming even below this center line, I think would be signaling potential failure to the downside. So let's take a look now. Let's scale down even a little bit farther. And let's take a look now. Actually, this is not the intraday chart. I want to look at, we're on a daily chart. Sorry about that. I didn't change that. But I want to scale down now to another time frame. And we can see a little more detail. So this is a 60-minute intraday chart of the S&P, and we can get, a little bit more perspective, I think, on the price action and kind of how to monitor whether we have a good breakout to the upside, or if we've just had a move to the upside and market is reversing back down. So these are the levels that I'm going to be watching. Now, here's where the highs of the move were. You can see where this yellow circle is. There is a gap to the downside from there, and the market made it just about to the start of that gap and coming back down again. So on this 60-minute chart, you can see this is where that sideways range is, and we can see that pretty clearly. Where the pink line is, that's where another sort of coil within a coil formed before this upside breakout. And it's also sitting on that 0.50 retracement that we looked at from the weekly charts. So we can see that this is going to be a pretty important support area to watch. And that's just almost at the center of that range. So again, when you have breakout trades, they don't always have an outcome of just breaking out and moving in that direction. They can have different outcomes. They can get a partial breakout and then fail and come back in. They can get a breakout, they can come and retest the area, the price level that it broke out from, or they can totally fail. They can come up and then reverse and come back down the opposite end of that pattern. When the price does that, that generally is going to lead to a larger move in that direction. So right now on the S&P 500, I want to be watching this 0.50 retracement. That's using the March 2020 lows up to the highs, and anything below here, I'm going to be looking at a bearish mode. Here, if we just hold around here and then turn back up, then the market may, let me move this down just a little bit, may come back up, fill this gap, and get close to that measured move target. This green line here, this is pretty heavy resistance. This is where the market had that move to the upside, outside of that trend line that I showed you on the weekly chart. So this is pretty heavy resistance up in this area, and that's just about the 4,070-ish level. So the lows below here, just below 3,800. These highs here are about 39. What was the high today? About 39.70. I have it written down right in front of me. 39.73 and a quarter is what we want to be looking at here. So move back above here. Sometimes you'll see it test and you see it start to turn, and that's giving you the indication that it's starting to move back up. Then be looking for these levels here. So we're in a bit of a pickle with today's price action because it did have a nice strong breakout, but then today on the open it moved up and then reversed, and it trended down pretty much the entire day. So that's putting a question in my mind as to whether this breakout move is going to be a go or a no. So we'll follow through on this. Keep watching this week and let's see what happens with price. I hope everybody has a great trading week. Once again, this is Leslie Jouflas with Trading Live Online.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.